Good morning, Facebook. I'm Jill Malandrino with the Voice of America, and this is Nasdaq's Facebook Live. We are going to end this record-breaking week in the markets with a fascinating conversation on market cycles and every trader's favorite topic to debate, technical versus fundamental analysis. David, thank you so much for joining us at the Nasdaq market site this morning. Let's talk about your philosophy and the firm where you are.
Well, let me start by saying I'm the managing director of Charles Nenner Research Center. I met Charles 20 years ago. I'm a JD MBA CPA and didn't become a doctor, but he is. And in medical school, he was able to find a pattern not related to markets, and then he applied it to markets, came up with a system based on cycles from the Greek word circle, which means top to tops in any data series. He added a target algorithm to it based on quantum physics, which I'm going to explain as we talk about. And he was at Goldman Sachs for, close to 2 decades, and I met him, and my basketball background, being trained to recognize talent, I saw what a brilliant man he was, and we were able to build a research business that has clients all over the world following our system.
So it sounds like it's more technical research that is put into this versus fundamental research. So what comes first here, the chicken before the egg? Do you look at earnings when you do this kind of analysis? Do you look at future earnings? What about what's happening with the election cycles and presidents and so forth? There seems to be a lot of fundamental things right now that are driving the market. So how does this strategy apply to investing?
Right. Well, first I want to take the definition of fundamental and the definition of technical, which people tend to think are two different creatures. We think cycles and target are fundamental. So when people put them in different baskets, why not consider what we do fundamentals? We were talking about before, the fact that mathematics, I went to Bronx High School of Science, mathematics is the basis of so many, why would math not be looked upon as a fundamental thing? Now you could say, do we look at earnings? We look at patterns of earnings, because we believe, again, I'm echoing what Dr. Nenner came in, he's a doctor, that patterns repeat from the past. And therefore, if you can find cycles which are overlapping top to tops in any data series, let's take IBM as an example. Let's say it topped every 2 weeks, 5, 11, 15, different prices. But if there was a sine curve top and we superimposed them all together and they're all topping this week, it's a top. And we don't know why, we don't care why. Then he added a piece to figure out how far moves are going to go based on quantum physics, which basically throws away the assumption we know cause and effect. Again, everything is completely different the way most people do things, and yet it seems to work. Therefore, it raises the question when people say, I want earnings, I want how many rigs are being out there for oil. Our attitude is we don't care. If the patterns have repeated, that's going to determine more than the quote-unquote news. The news follows the patterns rather than the other way around.
See, and that's interesting. So let's say you get a company XYZ, they had a record revenue, record earnings, and they're just firing on all cylinders, as fundamental analysts like to say. How could cycles sort of supersede that? Wouldn't you need that good news to create that top, which is the classic technical and fundamental argument?
Well, I'll turn it around like Dr. Nenner would do. If the cycles are topping, they'll come out and go, this is the most they'll ever be able to reach because everything is lining up so well. How could it ever be so good? And things will start to move down. Like we think short-term crude, if it doesn't hold above 50.80, we'll be heading down now. And over the last 10 years, our system is called the top at 147 at crude and the top at around 100. So the crude didn't always stay up, it came down. Was that fundamental reasons? Was it cyclical reasons? So I think the answer to your question, Jill, is that when news comes out, depending on where the cycle is, will determine how the news will be interpreted. The system doesn't actually look at news, it looks at the interpretation of news in the past based on voting patterns in stocks, bonds, commodities, and currencies in the past.
Well, if you take a look at crude, where it had that run up to 147 in 2014, then in February of 2016, it's down to $27 per barrel. How did the cycle predict this? How did it forecast it?
Well, it did, and it's funny, when I was sitting, Charles was on CNBC when he said that crude would go down at 147, and he mentioned a word that begins with D, deflation, and they kind of laughed. Meanwhile, it went down in 6 months, it went $100 down. So why? We have no idea. How? The fact that the numbers from the past, our system has got 50,000 lines of code, the programs are expensive, it predicted that the past would indicate that that was a top. Why we're not interested in, we don't think we're so smart, we let other people in the media come up and give their reasons. But it did call it, and very few people did. When it got back to 100, not that long ago, several years ago, it stayed there in a range for about 3 years, and it shot down in the high 20s. Look at Texas, look at all the places that are affected. Had they listened to the research, gold was up for 11 years. And then when we called the top around 1900, it'll be down for a little bit. It's been down 4 or 5 years. Now, lately it's coming up. We think longer term it's going back. So people use the research to decide how much pain they want to stay in or what kind of hedging they want to do.
Right.
So, but the system, I think we're talking about technical fundamental as the overlying, theme here, that the past performance, the past patterns will in fact determine what's going to be happening, not the news.
Which is so interesting because every disclosure you see since the beginning of time in this industry is past performance is not indicative of future results.
Right.
This research seems to suggest otherwise, if I'm understanding it correctly.
Well, I want to add to what you just said. How can you predict the future if there aren't patterns from the past? Like Charles says, you could ask the mailman what he thinks, and he'll say, well, I think, especially, people always say when Peter Lynch ran Magellan, he waited to see what his daughter came home focusing on, and that's the stuff that he bought because he got an indication of trends in cosmetics and clothing and stuff. So that's one way that you could say, well, he was a pretty smart guy, Peter Lynch, but he was a great pattern person also. And, look at bonds. Bonds have been up for 30 years because they hit a top in the 80s, rates that have been down. 60 years ago, bonds were the rates were low, and they shot up for 30 years, so bonds were a terrible trade. We think it's going to happen again. Is that something that fundamentals are going to call? I don't know, but according to our system, the pattern is unavoidable and will be repeated again.
It's really interesting because when I did my research for this prior to the interview, I did not expect to have this thought as we're speaking now. It's a very spiritual kind of conversation. When you ask a question, well, if you reflect on it, this could potentially be what the future is about. There's a lot of reflection, it seems, in this philosophy.
Yeah, well, as you see this, I try to be a little spiritual to begin with, but Dr. Nenner speaks 8 languages. He was a violinist, he was a black belt, he was a chess master. He's a tremendous thinker. People should watch the interviews of him. Our system predicts economic indicators, non-farm payrolls, GDP. He's a real thinker, and that's rare these days. So it came about because he questioned a thing that his professor said in medical school, that people get admitted to insane asylums at the same time, and we don't know why. So you're right that this comes from a very deep thinking person, and I'm very proud to work with him.
Well, what kind of clients do you have, and how is this research used by each client?
So I'm going to try and frame each particular piece. I'm going to start with one people don't even think about, and I didn't either, called sustainability funds. I don't know how familiar you are with them. I had no idea until a few years ago. This is bigger. There's more money in sustainability funds than in ETFs and hedge funds combined. And we have ETF clients, we have hedge fund clients, we have sovereign wealth fund clients, we have institutions, we have brokers, we have individual traders. We don't manage money.
Explain what a sustainability fund is for people.
Sustainability fund, people should Google it. ESG, ethics, social, and governance. So they're investing in do-gooder companies, and some of them actually do quite well. So we're asked by many sustainability funds to give long-term projections. What's going to be, and they claim, look what we did for Nike. We changed their patterns. Look what we did with Volkswagen, that they were caught doing something. So that's the stuff that they look for. And does it show up in the patterns? They ask us to look 2-3 years out. Sovereign wealth funds. 5 years ago, we were asked by one, they don't have $5 they're managing, $150 billion. We want to put $5 billion on copper. What do you think? And years ago, we said, don't do it. And the guy who called still has his job, so obviously they listened to us. Hedge funds, their game has changed a lot the last several years because of regulation. Many have moved to the Far East. Individuals, we have a lot of family offices I didn't mention before. How many family offices are there now? There's thousands all over the world.
And growing.
And growing. I had no idea. I played semi-pro basketball in Spain, yo hablo español, and I didn't realize how many family offices are in Spain, for instance. And you could have 5 family offices that each have $50 million, and they're totally different. So, and again, they don't need to trade short term, but they need to kind of frame how they're going to look at things. Do they give the money to manage to a grandson? Do they give it out? And so they ask us to give them a view of the entire portfolio. I'm finding interesting, look, bonds is a problem, but we think people are going to get killed. They already have gotten killed with bonds. And if they hold bonds directly, they'll be able to hold to maturity. If they're in bond funds, they're going to lose a lot of principal. There's going to be, I think, a tremendous loss of capital. And these are things we're able to hopefully help people with long term. So that's kind of the overall view of the different client base we have. And so my day, geographically and type of client, keeps me such that I don't sleep much.
All right. Well, thank you very much for joining us. We look forward to having you back. This is a conversation we could have all day long for sure.
Right. CharlesNenner.com. Please write to the site and sample our research.
All right. Well, thank you very much, David.
Thank you,
Facebook, for catching us. Have a great weekend. I'm Jill Malantrino with the Voice of America, and this is Nasdaq's Facebook Live.
Thank you.